Musk is Tesla, Tesla is Musk. And I think ultimately, right now, Tesla is the most undervalued AI play in the market. I mean, I believe the AI component of Tesla could be worth 1 to 2 trillion alone. And this, in my view, this is really the beginning of what is going to be just a massive stage of growth for Musk and Tesla. August 8th, in my opinion, will be a historical day for Tesla.
Interesting how sentiment changes extremely quickly. White knuckle period, no price target upgrade, suddenly, the whole thesis has changed. Oh well. Anyways, hey everyone, welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. Now I want to first start with some comments that were mentioned in the last earnings call by Elon Musk because, well, we're at the end of the quarter pretty soon. And so a nice reminder of what we might expect in the next earnings report. Then, of course, numbers out of China, the US, Europe, and some other news related to Tesla's AI future. So first up, remember the, let's say, sort of guidance that we've got. So we've updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. Now, of course, this is an Elon timeline. He said, we expect it to be more like early 2025, if not late this year. We think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. I think we'll have higher sales this year than last year. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. Our purpose-built robotaxi product will continue to pursue a revolutionary unbox manufacturing strategy. Remember, he also said we expect inventory builds to reverse in the second quarter, so this quarter, and free cash flow to return to positive again. If the company generates a lot of positive cash flow, we could obviously buy back shares, but of course don't expect that to happen anytime soon. Why is he talking about free cash flow? Well, if you notice or if you remember, last quarter free cash flow was negative. So that's the sole reminder that should set up the rest of this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. We're trying to reach 50,000 subscribers by the end of the year. Could be possible if you all hit that damn subscribe button. Thanks in advance. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with numbers out of China. So the Tesla weekly insured number came in at 11,700. Yes, it's again a week that is a bit lower than the previous one. We're still up 11% quarter over quarter, but we are down 5.2% year over year, year to date. With regards to the model mix, a bit more Model 3 this week than last week and a bit less of a Model Y. Then if we look at the top 20 SUVs in China priced above 200,000 renminbi, in May 2024, you can clearly see that the number one by far is the Model Y. Tesla also starts deliveries of the updated Model 3 Performance in China, and that's ahead of the third quarter expected when the model was unveiled in the country 2 months ago. So, a first here for Tesla being actually not only on time, but actually even early. Moving on to some European countries, in this case the Czech Republic, you can see that the third month of the quarter, a huge increase in sales, and that's due to incentives. Now, of course, it's not a lot, but as we've seen, the bigger countries in Europe have taken a hit this year, so it helps when other countries, even though if it's just small ones, that always helps with the end total delivery number. If we look at the Tesla weekly sales in Italy, it's been now a couple of weeks where we've seen a huge increase. As you can see, the third month of this quarter has been an excellent month. We're going to be up quarter over quarter and year over year, but of course, still down from the record months in Q4 2023 and Q1 2023. But still, it helps to see these types of countries pull their weight, whereas the other ones, UK, Germany, for example, being quite weak this year. And actually the same with another country that is, well, highly EV friendly. Norway this year also has not been great, but as you can see, more recently, we've seen a huge increase. So all of that will definitely help with Tesla's Q2 numbers and maybe even sentiment for the second half of this year. Now, if we look at the top 10 EV models ranking of new registrations for April 2024 compared to April 2023, number 1 and number 2 still Tesla Model Y and Tesla Model 3, although the change here is negative for year-over-year comparison. So Model Y down 4.7%, Model 3 down 55.1%, of course, due to that refresh, but still number 1 and number 2 by far. And yes, if we look down, number 8, Tesla Cybertruck, of course, there's no year-over-year comparison, and number 10, the Tesla Model X. If we look at the Cars.com American Made Index, the 2024 rankings, here as well, number 1, Model Y. Do you know which American company is not on that list? I'll give you 2 seconds to figure that out. In the meantime, I can tell you that number 4 is the Model S and number 9 is Model X. Well, if you haven't figured it out, you cannot find a fourth. Pretty interesting, isn't it? So far you can see, despite the, let's say, toughness or roughness in the EV industry worldwide, despite all the huge increase of cheap Chinese models, Tesla still doing quite well. Moreover, the new Tesla Model 3 long range now officially qualifies for the full $7,500 federal EV credit in the United States. This means that the Model 3 long range now starts at just under $40,000, including the EV credit. That could definitely increase sales for that new model. Moving on to some more AI related news. So this is a giant GPU cooler in Texas. Yes, this looks like what enters in your gaming PC, but now for a huge factory. Elon, of course, had to make a joke. Always nice to see that. We are nothing without our fans. If you have to explain this, it's because these are giant fans. Badum. He gave us a bit more information. So sizing for around 130 megawatt of power and cooling this year, but will increase to over 500 megawatt over the next 18 months or so. How will they reach that? I don't know. Who will provide all of that? I don't know either. Aiming for about half Tesla AI hardware, half NVIDIA and others. Interesting to see who the others will be. Is it going to be AMD? Maybe Intel? Who knows? Playing to win or don't play at all. It will be mostly for hardware 4 and some Dojo, and then hardware 5, which has been renamed to AI 5. In the second half of the year, Tesla AI 5 computer has around 10x the capability of hardware 4 computer, and Tesla makes the whole software stack. Of course, we've heard a bit more information about that during the shareholder meeting. Now, I do want to focus a little bit on this sentence right here, play to win or don't play at all. I think this is going to be of extreme importance, especially with everything related to AI, inference, generative AI, robotics, full self-driving, all of that computing power. It's going to be of extreme importance to be one of the first ones because everything moves so fast. Those that have the money to invest are definitely going to win. Those that have the, let's say, connections to get the supply, because then you could have, again, the same story that we've had in the last 2 years or so. High demand, not enough supply. So with Tesla right now, they're taking it extremely serious, investing billions and billions in everything related to AI. Of course, makes sense, right? Tesla's full self-driving, Tesla's autonomous vehicles, autonomous fleet, they actually need to do that. Other automakers, not really, at least for now. And then eventually, if they do want to license their software, their FSD license to other car makers, well, it's a no-brainer for them to invest all of that money today. Then moving on to Optimus Robotics. Also needs a lot of investments. And again, you can have lots of smaller startups, but they will have quite a difficult time competing with the likes of Tesla. Money is of extreme importance, talent is of extreme importance, and moving quickly is of extreme importance as well. I think Tesla has all three of those. Some other companies don't have, plus manufacturing capabilities. Tesla, probably one of the best on the planet. The other startups will have to partner up with other companies, so it's not all done in-house. Again, I think this is where Tesla will keep on winning. And lastly, the promise Elon has been making, the promise Elon makes yet again for Tesla's retail shareholders. The strong support from retail and large investors meant a lot to me. 2 heart emojis. I will do my utmost to ensure that their faith is rewarded. Of course, we know Elon Musk promises a lot of things. Elon Musk predicts a lot of things. Not all of them actually happen. Some of them happen, but happen later than expected. So let's wait and see what happens here. But I do think that he knows that retail backs him a lot. I mean, the shareholder vote basically proved that yet again. I think when it comes to proving the haters wrong, he loves to do that. He loves to do that more than actually proving the lovers right, I would say. So a mission-driven Elon Musk is definitely a big plus for Tesla shareholders. Now, whenever all of that will come to be realized remains to be seen. Of course, he also promised that retail will have access to a potential Starlink RPO. How will that happen? I don't know. So let's wait and see. Now, looking at the graph, we have yet another green candle on the weekly, but again, we have been staying around the same price range for quite a while. I think once we get the next earnings report, which is the next big circle, the one after that is the 8/8 event, I think that's where we could see the stock move up quite aggressively or move down, of course, depending on the results, margins, guidance again. Keep all of that in mind. 200-day moving average is under $200. The 50-day one at 177, and the 50-day one, the 50 and the 20 are basically at around the same price. The stock has rebounded or has stayed above those prices. So you could say that from a stock perspective, we still have some positive momentum. From a business perspective, small momentum right now as well. Of course, it all can change a month from now when we get the next earnings report, actually quite sooner. Production and delivery numbers will come much sooner than that. We can already see how good or how bad that quarter will be. I think it's going to be definitely better than Q1, but how much better? Let's wait and see. Overall, that's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.